Every life insurance agent needs to know exactly when they're supposed to be pivoting leads, when they're supposed to be making adjustments, and most importantly, what lead type is going to be the best for them. My name is Trey. I'm the owner of Agent Lead Lab. In the past 4 years, we've helped well over 700 agents issue pay $40,000 per month. That's paid commissions into their bank account. And on this channel, I try to talk about the strategies, tactics, behaviors, and things that you as an agent can go out and do and execute at the highest level in order for you to have success as well. So as always, please make sure to like, comment, and subscribe. Sorry if this is giving people motion sickness. So I'm gonna go ahead and pull this bad boy down. Let's get into it. All right. So first of all, the reason I'm walking, for those that don't know, I play professional football, and I would typically have a schedule where I'd go like Monday, Tuesday, Thursday, Friday would be my training days. Wednesday, Saturday, and Sunday I'd be off. I do like full body, not really like splitting. Reason I'm saying that is I'm about to get back into kind of training again, like I'm playing ball. By training, I just mean like my day-to-day schedule. I used to do yoga on Wednesdays, but now I have this walking pad and I need to get some more sleep. I typically average about 6 hours most days because I get up at 4:15 and I don't go to bed sometimes until 10:30, 10:45, which isn't really good. It's like 5:30. But I do know from playing sports, because we used to have that type of stuff in college happen. If you take naps through the day and you sleep longer on the weekends and you have certain days where you get longer rest, it can make up for it as long as like the right modality. So anyways, I'm back to Wednesdays, getting up a little later and then doing my morning routine and then walking now, because I was basically training 6 days a week, Monday through Saturday, every day at 4:15, even Saturdays. But I understand and know this is a game I'm playing. Business, very different. Timeline's different, so I can space things out, still get it in. So we got to walk, get the heart rate up. I really don't like not doing anything for the day. I got to walk the dog, walk with my wife, go to the gym, something every day. Just don't feel right if I don't. So that's why I got this regular fit on. It's my gym fit, and after that, I'm gonna start the day. So anyways, just to give you guys context for those that are watching, you'll be seeing me do these treadmill walks. And I'm not gonna lie to you, this is probably my favorite time of the day because it's really my opportunity to just talk. You know, for those of you that do watch, I really do appreciate it. I watch a lot of YouTube myself, and this is probably not optimizing for viewership. It's optimizing for people that want to tap in and hear what we're doing. We're building $1 million a month business. I'm documenting every single day, basically, talking about the highs, the lows, the agents, the clients, what I'm seeing, and what's important. So anyways, let's get into it. So today we're talking about when, and this is my first time really walking, typing, and trying to stay focused at once, but sorry, we're gonna figure it out. We'll get used to it. All right, so the thing is when to pivot leads. Okay, so let's talk about lead types, behaviors, AV, and expectations. All right, now the thing is, most people think that when you have different leads, that they're all the same. Now you hear a lead is a lead. Obviously, it's very true. But you have to understand what that actually means in the context of each individual lead type, right? So a mortgage protection lead, all right? And for those that don't know, mortgage protection, right? It does not mean term. But everybody understand that. Mortgage protection does not mean term. Mortgage protection just basically means that you're covering using life insurance to protect their mortgage. Now, sometimes that could easily be, you know, say for example, Sadie's 75 and she has a $300,000 mortgage. Well, one person was, well, she can't get mortgage protection. She's too old. That's not true. You don't understand how she gets mortgage protection. How she gets mortgage protection is determined based off of what plan you can put in place. Because mortgage protection is not a real form of life insurance. Life insurance is whole life, IUL, UL, term, right, etc. So you have to understand and know, how do I put her in the best situation? Well, we call that equity protection. It's a form of life insurance using whole life that protects the equity in the home so that way she can sell it. Because I'm not going to sell Susie with $300,000 mortgage that's 75 a term, number one, because she's not going to get approved for anybody. Number two, that's not going to make sense because she probably outlive it, right? And number three, she probably doesn't want to actually keep the house anyways when she dies. Figure out that her son wants it, somebody else wants it in their family. It's like, yo, it makes no sense. So at the end of the day, our job as the agent is to put that client in the best possible position. Okay. So the reason I'm breaking down mortgage protection is because you have to understand different lead types have different behaviors. Now, mortgage protection, although it may have the same age range as final expense, they are different clients. I was like, well, no, Trey, no, it's not because you're selling them whole life. No, that's not true. You're selling them a different solution. You're selling them whole life to protect the equity, but their behaviors of demographic is different, right? You're dealing with a clientele who actually is saying, you know what? Here, I have a home. I've got a bank. I've access to capital. Obviously, going to pay for this home. Probably married, probably have kids, grandkids, right? Pretty consistent income. So less chargebacks, more likelihood for you to be able to put a plan together that makes sense. Now you go to something like final expense. Very, very different niche. Okay? Traditional final expense, not veteran. We'll get to that in a second. Traditional final expense, simple, right? These are going to be 50 to 85-year-olds. Now, these people in particular, you have to understand, this demographic is used to filling stuff out. They're the ones that do call-ins. They're the ones that are sitting around looking for cheaper prices. They're, our grandparents opening up the newspaper, cutting out flyers. I see some of my grandparents do that. They're looking for any deal they can find. Anything that can cut them a few dollars off, they're willing to do. It makes sense to them. They're saying, hey, you know what? This is actually what I need to focus on. Because they want to find the cheapest possible deal. They will take $5 off, $10 off of a life insurance policy for the sake of saving $5. And you'll be the agent to flip them, or somebody else will. I don't want to deal with a demographic like that. It's always looking for a few dollars, penny pinching. Right? Now that's me. Some people love it. It's cool. Just know the demographic you're in. Don't be upset if you have chargebacks. Don't be upset if they're switching policies. Don't be upset that they can't pay because they're on Social Security. That you get an insignificant funds update. You have to understand that. If you don't, can't help you. You don't know the demographic. I talk about these principles because we preach this here in our community, but also you have to know this as an agent. Because you won't know when to pivot. You won't know when it really is the leads, when you really do need to change. I'll get into that. Okay? So FEX, flimsy. Just being honest. Call it what it is. All right? Now, we went over mortgage. We went over final expense. Let's talk about veterans. Now, a lot of people don't know what this is. They think that it's, yeah, I've got final expense leads. I get some veterans here and there. No. Veteran is an actual lead type now. Okay? Veteran life insurance. You go to the Facebook ads library, you look it up, you can see all the different veteran videos, ads. It is a specific demographic of final expense, still that 40 to 85, that has significantly more money. It's a niche within a demographic. Okay? Now, understand this. This is a niche demographic. Let's start with why do people like niche demographics? Why? It's because they can geo-target without Meta's setup the actual income of the right audience. Okay, for those that don't know, Meta, I think it was 2024, came out and started rolling out Meta Andromeda. They started removing targeting. Okay? So what that means, which basically people tell you they're not running on Meta, everybody's running on Meta. Every business is running on Meta. Don't matter. They're on Meta. Okay? Facebook and Instagram. Threads, WhatsApp, right? Come on now. Shoot, even Google has made it more difficult. Here's the thing. Because of that, marketers, which I wouldn't really consider myself a marketer. I'm a life insurance agent who learned how to market. I like saying that because it is the truth. I'm not inherently a marketer. I've now hired marketers. They are on a whole nother level than I am. Okay. Life insurance agent who learned how to market recognized that the days of running IUL leads and targeting people with money, different interests, is cooked. Absolutely cooked. You can't do that anymore. Right? They rely on the creative. Okay. Now, in a place with a recession-proof offer, you can imagine that creative, when I say creative for agents that don't know, that just means what's actually running as the ad. Very basic. Doesn't take a lot. Life insurance is what it is. You can't really dress it up much more. You can make it sound like it's something different. But if you make it sound too much like it's something different, you're going to confuse the client. It's just like saying water. You know? Multi-dimensional. Can come in a solid, liquid, or a gas. You can put it in a container. There's an everlasting, well, not everlasting. There's a abundance. More of this covers the earth than doesn't. Right? Water. Okay? Life insurance, there's different forms. They can all do different things. They all have the same premise. So what does that mean? Everybody can get it. Everybody is a lead. So that's beautiful for the industry. Bad for marketers. Okay? Because people want good leads. But if the demographic of your ideal client is everybody, then what does that mean about the quality of the leads and the amount of opportunity is for you to generate leads? Well, the opportunity is really high. The quality is also really, really high. Sorry, the opportunity is really high, right? But the ability for the quality to be really low is also high, okay? Because you have to understand everybody is a lead. So let me give you an example. We're going to talk about IULs in a second. But veterans, okay, are just final expense people on steroids that you could typically close for the premium of mortgage. So why do most of my clients run veterans? Because it's simple to explain and it's simple to close. It does not take a rocket science. The problem with mortgage protection, be it that it's an amazing demographic, is that you are having to actually shift somebody's beliefs. Susie comes in, filling out the form saying she has a $300,000 mortgage. She wants to protect her family. She's 75, wanting a term. Just letting you know that. She does not come in saying, hey, I want equity protection. She don't even know what that is. So it's your job to re-alter her beliefs in regards to why she thinks she needs this thing. So when you start off the call, like, hey, Susie, it's great to meet you. My name is Trey. I'm going to be your licensed advisor. Now, just to confirm, it's your husband, John, correct? John, how you doing? Nice to meet you. Perfect. Let me explain a little bit of how today is going to go. All right. So I'm what they call a licensed broker. Okay. I'm going to do all the shopping for you. So the beautiful thing is, after today, you won't have to go talk to anybody else. Does that make sense? You say yes. So I have access to all the carriers, blah, 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 blah. Our job today is to figure out, in the event that something does happen to Susie, or in the event that something happens to you, John, that we can have something put in place to protect this asset. Very key. I don't say to cover the mortgage. I say to protect the asset, right? So you have to be very particular with your word tracks. You're not going to say throughout the script, yeah, we're going to cover the whole mortgage. You're going to cook yourself. Even if they are healthy, I'll be honest, getting them a term at 60 is not the play. It's really not. And if you show them the data about how many people actually get a term paid out and how much they're going to have to pay, you'd be better off doing that. I sold everybody equity. I sold 50-year-olds equity. I sold 40-year-olds equity. I sold because I believed in it. It makes no sense. Dude, if you pass, why are you going to pay off the house? Why not sell it? Most people are going to sell the home. Sell the home. Get some life insurance that, God forbid, you do pass away before the mortgage is paid off, right? You literally can just give that money as a tax-free death benefit to your family, have them pay the mortgage payments, and then turn around and sell the home. It makes zero sense. Especially if you've got like a $200,000 plus mortgage, $150,000, it's $80,000 plus mortgage. It's like, dude, right? Now you outlive it. Guess what? You've got whole life. You don't have to go reapply. This is a one-stop shop. It does both. But you have to get people to believe that, because people will be like, no, that's what I want. Right? You're having to shift what they really want. You have to show them and how it works in a different way. And that can be difficult, especially for newer agents. Veterans, though, you don't have to do that. It's life insurance. They know what it is. They serve their country. They understand it. You just need to make sure that the price makes sense and that they actually need it. Not just shop it. And that's just a law of numbers. But the ROI is crazy. You close one person for $200, $2,400, and the cost to get these leads is significantly lower. So it's a lot more scalable. Now, there are obviously more homeowners than there are former veterans, but at least I think so. It's positive, right? So the TAM, total addressable market, is obviously bigger. They're both not huge, but it's bigger, right? So then the question becomes, okay, if that's the case, the question actually becomes, how do I know which one to choose? Now, we haven't forgotten one, the favorite one that everybody likes, IUL, all right, or Index Universal Life. You're probably like, yeah, these are great. No, can't target. These are actually, at scale, the cheapest leads, but the hardest to convert because there is nothing that's separating. They're just like final expense. You're probably like, why? Because it takes nothing within that demographic for them to qualify. You run an ad that says, hey, you can get IUL. It's life insurance, get a little bit of cash value growth, living benefits, pays out in the event of chronic illness, disability, whatever. Whoop-de-whoop. Every single person with a pulse is going to raise their hand. Ooh, does that become your own bank thing? Ooh, I can get approved for this. There's nothing within the actual demographic that makes them stand out. Now, I like it from a life insurance standpoint at scale because you can get leads cheaper. And honestly, if you get people that are over 55, 60, you're just going to sell them a whole life plan. So it's a better final expense, in my opinion. Less chargebacks, a little bit more money, right? They'll be working. But the thing is, they're not going to be the ideal demographic because there's nothing separating them. You can get convicted felons. You can get anybody because everybody kind of qualifies for it. Now, is it what you want to do? No, but it is the truth. It is what people qualify for. So what you have to do is you create niches. So that's why you see things like truckers. Why? Because how take health exams. So they're healthy and they have money. Caller, etc. Okay, these niches have money, they're healthier, younger, etc. Okay, like our blue collar leads, the average age is like 29 to 40, way younger, way younger. Now they're working, so it's a little bit hard to get in contact with, but way younger. So then the question becomes, right? How do I determine, and I'm not going to include annuity because that's just a whole nother ballgame. We're just going to talk about the basics here. Right? The question is, how do I determine when to pivot? Because you said the purpose of this video is, when do I pivot leads? So here's what I've noticed. Let's start with when you don't. You do not pivot because you're not closing. Okay? Not because you're not closing. Okay? Not because have no booked apps. Not because of show rate. Not because of activity. You do not pivot leads because of activity, things that you can control. That you never do that. That's on you. If you're not closing, it's on you. If you have people not showing up to book appointments, it's on you. If the show rate's not there, it's not on you. If you're not getting one call closed, everything's on you. Never blame the leads. If you ever want to make an excuse for you not doing the things that the leads require. It's God's honest truth. Okay? Now, here's the thing. When you do need to pivot, it's based solely off when the behaviors of that clientele do not align with the way that you want to be selling life insurance. That's when you pivot. I'm going to repeat that. You pivot when the behaviors of that demographic do not align with your way of wanting to run your business / sell life insurance. What does that mean? All right. Final expense requires me to do one call closes. Final expense requires me to not make a lot of commission. Final expense requires me to know that I'm going to have chargebacks. That's a demographic behavior, brother. And I mean, chargebacks isn't really, but it is to an extent. You'll have chargebacks for every niche. I'm not going to say you're not going to have them with certain niches. You just have less. The biggest thing, though, is the amount of time it takes to call is probably the biggest factor. Some leads don't take a lot longer to call. Some leads are one call closes. You close through the day. Maybe you want to train your team from 12 to 4. Sell in the evening. Train your team in the morning. You don't want to work weekends. Dude, every lead type's different. If you're going to get blue collar, truckers, nurse, dude, you got to be willing to call them when they're available, not when you want to. If you want to rip through the day, you better grab some bets. If you don't like changing people's beliefs and making them see a clear picture, really being able to sell, don't do mortgage. You might want the premiums. Oh, I want to do premiums. No, you need to figure out, what does that lead demographic require of me? Does that align with how I want to sell life insurance? If the answer to that is no, then you are not doing what it takes. Point blank period. No questions, comments, or concerns. You need to be prepared for that. If you're not prepared for that, I can't tell you anything. Sorry, this is what it is. Right? So understand and recognize that every step of the way, every lead type requires something different. Do not make them all the same. That's why I started off the video. Don't say, hey, man, I really think that, it's the leads, bro. What are you complaining about? Is it a lead demographic issue? Or is it you? Because most of the things that people complain about is closing, annual premium, or closing, right? No book appointments, people not showing. How you got to work them. Dude, don't complain. Go back to final expense if you want to talk to people through the day and to get closes. But don't be upset when your closes are small. Don't be upset when they can't afford it, when you get a bunch of insignificant funds. Don't be upset. Well, I want to go back to this. Don't be upset when they don't pick up the phone immediately. Don't be upset when it takes you a long time to get them on the phone. Don't be upset. Well, no, I'm just letting you know. Make the decision. Make the decision of what lead you want to work. And when you do that, things will go better. Right, I'm finished with this. We just launched a new offer for those that are working. Right? If you're an FFL agent making $30,000 a month, we'll guarantee you that we can get you to $60,000 in issue paid business in 30 days or less. People are probably like, what? But here's what I know. It's simple. Bro, you got to buy enough leads and work. The offer is not complex. I'm not selling you no AI software. I'm not selling you nothing. The simplicity is you got to buy leads and go to work. How many leads are you buying right now? See, the questions are simple. Now, I got to be willing to know that I'm going to have some high quality leads, but I'm also going to have some people that I don't close. And that's okay. Because not everybody's going to be willing to invest in themselves. Now, they don't have to do that. They can just try some leads. That's the downsell. But the reality of the situation is if you want to issue pay $60K, but you have to work. You got to sell different leads. You're not getting a $60K for selling final expense. Well, I'm selling this. You're not buying enough leads. I'm sorry. You need to be spending a minimum of $200 to $2,500 a week. A week. Now, you can get there your own way. I'm telling you the way that I know to get there. You want to get there with me? This is what you got to do. So how many leads you got to buy? You got to buy 75 leads a week, minimally. You got to do that for 4 weeks. You got to call every lead at least 5 times a day. At least. Send me a screenshot of calling. Every lead that comes in, you got to call it within the first 3 minutes, no matter what. Yo, if you should have an automated system following up with leads. If you don't, it's going to be a lot of manual outreach. You should be calling leads from your CRM. You should be calling leads from your cell phone. You should be quadruple down leads, FaceTime audio, text to intro. You should be doing everything to get in contact with the leads. All this is like, dude, you want to hop on a call for me to show you how to do it? This is what you have to do. Do you want to do it? Yes or no? We're not going to make this more complicated than it needs to be. Here's the 3 things that make us different. You want to try it out? Yes. You don't want to try it out? Cool. I'm not going to overcomplicate it. I'm not going to make it more difficult than it needs to be. That's what you have to do. So I hope this works. Sorry, I hope this makes sense. I apologize. I know this works. The reason why I know it works is because if you go to our website, I've got our 800 agents. Crushing it. Been crushing it. My community, just had another guy do 60K. Johnny is what it is. About to have Lux do 60. We have tons of agents do 50 and 40. That's easy money. But my question to you is, how do you create consistency within your business and knowing when to pivot leads? Got to figure out the lead type and go all in. So I'll see you guys next time. As always, please make sure you like, comment, and subscribe. Have a great day.